So thank you very much for joining me today.
It's a pleasure. It's lovely to be here. It's
Okay.
my first one of these, and it's been a fantastic experience.
Excellent. Well, do come again.
Definitely.
Now, tell me about Rome. What is Rome?
So Rome's Ringier One Africa Media, formed beginning 2016, a merger between Ringier, big Swiss publishing and classifieds family-owned business, 186 years in existence.
Yes.
And then One Africa Media, who was based out of South Africa, running property jobs and cars across various markets.
Okay, and why did they come together?
I think Africa's very early stage market. There's not a lot of room for many players.
Yes.
So there's a lot of acquisition, consolidation happening in the market. People joining forces because as a more dominant player, more platforms in a market, you're much more likely to win it.
Okay. So what segments does Rome operate in?
So we're across jobs, cars, property, and then general classifieds across 7 African countries currently.
Apparently?
Currently.
Oh, currently.
Currently.
I thought you said apparently.
No. Definitely so.
I didn't say that's not knowing your business. Okay, so out of all of those 4 segments, which is the most profitable for you?
Jobs.
Okay. Why?
I think it's one of the biggest challenges on the market. There's a lot of funding towards jobs, training, education, helping people both upskill, find work. Foundations, Microsoft, MasterCard, they're pumping money into the industry. And we're well positioned to work with them to once now they've trained up, they've upskilled people in the countries, and then we can help them place them into jobs.
Okay.
Also align with training partners and work with them to do a lot of this training.
Okay. And what are and which of these segments provides you with the biggest challenges?
I mean, they've all got their challenges. I would say real estate is probably one of the more difficult ones. Reasons in every other market, it's a very emotional decision. People aren't buying regularly. In fact, buy rates are incredibly low in our markets. People don't have the income. There's very low access to finance. Very difficult to get finance. Credit risk profiling is a little bit crazy. And what there is then is often, so it's very rental driven and incredibly offline, incredibly transaction broker based.
How much rental driven? I heard from Lizzie about the Kenyan market. I think it was 70%. You said is rentals. Is that consistent across sub-Saharan Africa?
Pretty much. It's probably even higher in some markets.
So given that, when you think about online real estate, how much time are you really actively thinking about the buy-sell side of the problem versus the rental side of the problem?
We've probably, to now, been focusing a lot more on the buy-sell, just because that's what gets the agents on board. Agents the world over, they're looking to sell, so those are the properties they want to list. So get them on board with their with their for sale properties, and then now try to get them to put their rental stock online.
Okay.
But yeah, we do need to start shifting that a bit.
Okay, so when you think about the rental market, let's think about the for sale market, right? Do you run portals in every market, or is it a horizontal in the markets?
We've currently only got the one dedicated property portal, being Byron, Kenya.
Yes.
And then we've then run horizontals in Tanzania, Senegal, and very early stage Ethiopia, where we're now playing with that via the horizontal.
So for you, real estate is really those 4 markets?
Yeah.
Okay, so let's focus. Clearly, Lizzie's going to present a little bit later on about the challenges of the Kenyan market from a vertical perspective. Let's talk about the horizontals and how you think about real estate. What are the challenges for a horizontal in those markets for real estate?
Very much, I think a lot like a very early stage vertical. It's getting people online and providing them with the leads, with good leads, and then just convincing them that we can actually provide a service over and above the traditional offline methods. They love their billboards, they love their flyers.
So even for rentals in the market?
No, rentals, funnily enough, rentals are online, but it's a lot of like WhatsApp. There'll be WhatsApp groups and they just fly off on the WhatsApp groups. Social media, Facebook, big with rentals. There are dedicated groups.
Okay.
rent, buy, rent, and
So would you say that your biggest competitors are really those products, the Facebooks, the WhatsApps, and the social networking?
yeah. There are a couple of, it varies from segment to segment, but I'd say in property, yes.
Okay, so how do you then think about the evolution of your product in those horizontals businesses? Is it, I'm just going to go deeper on the classifieds, as Malcolm would describe the version 2.0 of the business, or you're starting to think, no, I'm going to move into the transaction, because especially in rentals, as we've seen, there's a lot of opportunity for making the rental process far more efficient and effective.
Yeah, so I think that will be our next evolution, is moving into the transaction rentals, and then on the other side, the developments. More focused with then a property vertical, I think, on the developer side, or spinning off something that can get into that transaction. But yes, it's definitely about bringing those rentals, that transparency, and just smoothing through the process, because there's a lot of fake rentals in the market. So.
Okay. So let's dive into rentals, because I'm very curious about this, because there must be enormous opportunity. It sounds very much like, if you think of the spectrum as you know, I'm going to keep referring back to Malcolm's 1 to 4 type spectrum, because I think it's a good way to think about it. You have at one end the spotter homes and the people who are really saying, I'm going to change the way rentals are done. It's now all online. It's credit card driven, and so on. How in today's sub-Saharan market, is that even achievable?
If you're willing to play for a long enough time, yes. I mean, credit cards pretty much non-existent. East Africa, you've got mobile money, so that already allows you to bring a transaction online a lot more.
Describe
swiftly.
mobile money for me.
So wallet, basically, they run generally with the mobile network operators.
Okay.
You've got a wallet with them that you can now top up and withdraw money from, and then I can send money if we're both with, in fact, you can do it across networks or across different types of mobile money providers. I can just send you money, I can pay for anything. It's all driven, so it's all USSD based, so from the cheapest feature phone up to now pretty efficient apps that allow you to process anything.
All right, so I would, through my telco, I would top up, put $100 into an account.
Pretty much.
Which
and then
they have.
It's in that wallet, and you can transact between wallets and pay merchants into their wallet.
And can I get money out of it?
Yep, you can cash out. So how Safaricom did it very well is they set up merchants. Well, they made a lot of the small shop owners merchants.
Okay.
So you can go to any merchant and deposit cash. You can also withdraw. You can go to them and take cash out. And then these days they've integrated with a lot of the banks and stuff, so you can transfer in and out if you've got a bank account, to your bank account.
Okay. So therefore, if clearly focusing on, I remember a long time ago when the Prince was, the self-titled Prince, I've evidently found out, from Byrant, Kenya. He would talk about that they were using this mobile wallet as the way to collect money.
Yes.
And for transactions. So let's focus on the rental market. What do you really offer that segment today?
Today, not much. So I think it's where we can offer and put in the disruption. I've fully caveat, I'm relatively new to the property space. I've been doing classifieds for a couple of years, but because of our structure, not necessarily focusing into the verticals that much, very market dependent. So I think, again, depending on the market, it's access to those listings. They often go very, very quickly, especially in the lower end.
Yes.
There is a lot of fraud, so people who are scamming you for a listing, either that it's not available or it's not theirs. So again, offering that at a fee, that it's a trusted listing. You were talking about pre-approved applications. I think, again, given the risk profiling, the way it works at the moment in our markets is incredibly laborious. So if we can add value there so people can get to that information faster or get that approval faster.
Right.
And I think there's a great, there's a very small formal agents of networks in all of these markets. There's a huge brokerage or informal guys. So I think if you can somehow mobilize them and bring maybe a bit of legitimacy there, talking earlier, almost becoming that franchisee. and
Okay.
taking
So,
from
so,
there.
so at the moment, if from your horizontal perspectives, how are you making money out of this segment?
It's
Or are you making money out of this
So
segment?
it's very market dependent. I mean, take Ethiopia, for example, no. But it's a huge potential, but you're still only sitting at about 15% internet penetration. Out of 100 million people in the country, and more than 100 million, only about 5 million are actually urbanized. So it's too early stages. Tanzania is a tricky market, so we've just letting it grow sort of organically. We do monetize very heavily in Senegal. We're by far the dominant player there. And yeah, so it's very much monetized on a 1.0 basis at the moment. Well, 2.0 basis at the moment.
So it's just basically advertising type models.
Yeah.
A few little upgrades that they can buy.
Well, we charge per listing, so
Okay.
they have to pay to post and then pay to upgrade, and then various other branding and advertising things. We do have a property brand there that we're using for sort of reference point information, and I'm intrigued to look at that as pushing that more into the transaction space.
Yeah, it would make sense, right? If you've got someone, they're going to pay you to advertise, and then bolting on products and services
Yeah.
that make, can you qualify a renter, right? How do you, have they got a job? Have they got,
Yeah.
I don't know if you can do credit checks in Senegal, but how do you think about those additional products and services that you can add?
Yeah. And there are a lot of people coming out now with quite innovative ways of doing credit checks. I was at the Kigali Tech Summit a couple of weeks ago, and there are a number of new credit scoring bureaus looking at a lot of them are around farming, so they look at, well, how do we get the risk profile of a farmer for funding. But I think there are a lot of opportunities there to partner to turn that model on its head, because the traditional ways of doing credit scoring aren't applicable and are definitely stifling growth in all of our markets.
And your can we have, by the way, can we have Slido up here, please? How because you guys should ask questions. How do you how your consumers? What's the the people who are interacting with rentals? Is it just across all ages, or is it primarily skewed towards the younger end?
It's across all ages. Obviously, Africa's got a very young population. I think the median age is something like, in Kenya it's 18 by the latest stats. So they're obviously not on the home ownership market yet. But what you do find, because buying is so difficult, that in the cities especially, a lot of people rent their entire lives. So you anywhere from, I'm renting literally a tin shack in Kibera, which is the biggest sort of informal settlement in Nairobi, to I'm renting houses in Karen. And that will be both locals, and then of course expats tend to rent. So that's quite a nice market to tap into if you can.
So then they're open to. Can please bring up Slido. Lola, can we have Slido, please? Yes, thank you very much. It's amazing what you eventually get. Which markets excite you in Africa most? Just I'm going to bring in these questions as we go.
So for me, and I am a little bit biased because we only operate as a classifieds there, Ethiopia. I think the potential in that market, just the growth that can be had, is, if they get it right from a political perspective, it'll take off. It's I think it's about the only African country, other than maybe Ghana, that's expected to escape poverty by 2030. Most are starting to stagnate. And at 110 million people,
It's a huge market.
that's massive.
Yeah.
So
Let's keep going down this rental path. So do you think there is I'm trying to really understand the real opportunity in the market. I can understand that Senegal, more advanced as a site for you, there is a chance to move into the transaction. Is the underlying infrastructure there to allow you to do it? So is there standardized, we talked a little bit about credit checking. Is there standardized contracts? Do the landlords want to have an independent party certify the potential renters? Is there clear money payment mechanisms so you can garnish someone's wages to make sure they do pay for the rent?
yeah, so one of the legacies of colonialism is quite a lot of focus on paperwork and contracts, so definitely that exists. Probably not in the very, very low-end market, but certainly by the time you're getting to the middle class to upper, or lower middle class to upper class, definitely it's contracted. People want you to sign for an X number of months. I think the world over, landlords like if they can get someone they trust to do it for them, hands off is a lot easier for me.
Yep.
And access to getting money. Yeah, so I mean, that's where things like mobile money are maybe not as advanced. You can't kind of just take an automatic debit order or something. You've got to get money from them they've got to pay every month. So there are a lot of the regulation and sort of, as you say, infrastructure challenges in a market that I think will make it's not going to happen overnight. It's how do we build it up over the next few years.
Okay. So it sounds like you're facing a bunch of challenges. But the thing that from an outside-in perspective, and one could argue from a Western perspective, looking at this, how big can the markets really be anyway, right? Are we talking $1 million rental, $1 million revenue for these businesses for the real estate segment? Are we talking 10? I mean, how big is this? And then the follow-up question is going to be, well, then why, if it's, why is Rome doing all this?
Yeah, so I mean, currently, no, you're not making the revenues that you're going to make in Europe or America or even probably here in Asia. But there is opportunity to be had, like every market, and I think we're in it for the long. It's a really long-term game.
How long-term are we talking about? Grandkids?
Yeah, no, I mean, you said it, I think, at the masterclass, sort of 10-year plus horizon to truly probably be fully operational, fully involved markets. But we are very lucky in that, our primary founder, Ringier, it's literally is a 186-year-old family-owned business.
Yeah.
Who've been in publishing since day one and kind of moved online, magazines, tabloids, and now into the classified space. So they've got the patience to see this through.
Do you think? But how much do you invest in these markets? Because how expensive is it to run these operations? I assume the cost of labour is relatively low.
Yeah, so cost of labour is relatively low.
But what's the quality of labour like?
It depends on the market. Education levels in something like Kenya are actually pretty high. So you can get pretty good, decent people at, as you say, lower labour costs. Marketing costs vary. I mean, online has obviously come right down, but in a lot of markets doing branding, which is often what we need, is more expensive. So we do need to balance our strategies and our costs quite carefully to ensure that we not overcapitalizing.
Yes.
OLX did that, and they left.
Yes, which really leads to this first question here, right? What Frontier Digital Ventures is leaving most markets in Africa. Many people feel Africa is extremely hard. Even Asia is proving to be not as easy as thought before. Would you agree with that?
Yeah, I think a lot of people came in Asia, Africa, and said, excellent, there are these young populations, they're digitizing, they're coming online, economies are booming, we're going to come in and make a quick buck. And that's definitely not the case. They are incredibly hard problems to solve. And there are a lot of learnings from what's happened in the rest of the world that we can apply, but at the same time, they're very unique markets. Certain things have leapfrogged, certain things will never happen. GDP, per capita incomes are pretty much 2.5. Top of sub-Saharan Africa, excluding South Africa, is about $2,500. Most of our markets are sitting at 1.8 or lower.
Yes.
So you are looking at very different economies of scale. Okay. But I think if you can, partly why it's good to be across a number of verticals and a number of countries, if you can kind of now start leveraging that scale together, it becomes a lot more attractive.
Okay, which sort of makes sense. Do you operate in Africa as an investor in Portal Startups, or as a media company that owns its own assets?
Media company that owns its own assets generally, or a majority partner in attractive markets.
Yeah, that's sort of the Ringier model.
Yeah.
I think is that. But to what extent are they then independently operated versus centrally controlled?
So Ringier has very little hands-on day-to-day operations in the business.
Yep.
We have operations in every country. We do operations and marketing very locally. Tech is centralized or verticalized. We run that out of South Africa and Mauritius. And then we are very lucky position to be able to leverage the Ringier group for their learnings, for various group contracts, group experiences and the like that help bring down some costs.
But how relevant is for example, their experiences in Switzerland? right, with Immo Scout 24 to Ethiopia, right? There's probably a little bit of a gap.
There is a gap, but I think we get to see what they did, what worked, and then know, okay, maybe we shouldn't try that because it doesn't make sense. Or if we're going to launch a new vertical, okay, how did they get that going? Or what is the best way they found to monetize? We have to localize everything, but we're on the continent specifically because we know we have to do that. We're in the markets because we know we need to localize. It's not just copy paste, put down, and expect it to work.
Okay. What? Because I think that sort of leads interestingly these bottom two questions first. Is how do you get around the talent issue for your teams in these various markets?
We've learned we've got to hire slowly. And we've got to invest a lot into training. So you get, in a lot of the markets, people are hungry. So they're very willing to learn. They're very willing to take risks. They're very willing to try and make something of it.
Yeah.
But you do need to invest the time and effort in the training. You're not going to pick a lot of like top salespeople off the ground. Or if they're there, they're probably being snapped up by the big multinationals, and we can't sort of compete on that level at this stage.
So how do you then think about leadership? Because in businesses where you have a lot of workers who may be super hungry to be there, don't want to lose their job, and are happy to do whatever you tell them to do, but you've got to tell them what to do. How do you create a structure where the people at the top have, because you have a lot of knowledge and understanding about the direction they need to go in, because you can't keep swapping and changing at the work level because people get a little confused and it takes a long time to get them sort of skilled up and heading in the right direction. So how do you ensure that you get clear on the direction you want to go and then have the right people at the senior level driving it?
Yes, I think we're very lucky. We've got a very strong senior team. We've got very strong CEOs in every country who know their businesses, know what they need to do. We've become pretty efficient in terms of strategy and operations, very, very operations process driven. And that we can replicate across markets, across verticals.
So you're talking about like reporting, KPIs,
yes,
etc.
Yes, holding people accountable, regular calls, tracking, making sure, and working with the teams now that they know their numbers and they start understanding what that means. I mean, it doesn't happen overnight. It's an ongoing process, but you do see that change, and we've gotten also, I think, pretty skilled at looking at how do we develop talent internally, because there aren't a lot of people on the continent who are in our business, in our markets, so we need to create that.
Okay, which makes sense. What technological challenges do you face apart from the business challenges?
I mean, I think a lot of people are very mobile. So everyone's on their phone, but a lot of people are first, like they join the internet onto their phone and all they know is Facebook. So it's kind of that operation of how getting people to understand how to use apps, how to use a phone. A good example is, I mean, Uber's in Kenya and it works incredibly well, except don't expect your driver to know how to read the map. You need to know where you're going and often direct them.
Okay.
It's things like that. Like it's a map, but
so they can use Uber to take the call or take the ride. They can use Uber to get to where you are.
They often have to phone you to find out where you are because the maps aren't that accurate also.
Okay.
There's not great addressing.
I was going to say, how do they find you if they can't read a map? Right.
And then, especially if they're not like sort of say Nairobi locals, which is my majority of my experience, then you have to have a sense of where you're going. So I think it's that. People are incredibly data conscious. Prices have fallen, but it's still, relative to income, most people are still spending a higher percentage of their income on data than anywhere else in the world.
Okay.
Technologically, some markets, payments are still an issue. East Africa, Kenya, Tanzania, Senegal, which is West, have very good mobile money networks. But Nigeria doesn't, for example. Their government hasn't regulated for mobile money. So actually doing online payments is more tricky because you're dependent on credit cards again, and credit card penetration is low.
Yes. Especially in Nigeria.
Yes.
That could be dodgy. Okay. How do you get it? What are the top 3 challenges you face in the African market, the sub-Saharan market?
Low incomes, per capita, GDPs, all of those kind of things. People don't have a lot of money, so they're very price sensitive as to why they want to pay. A lot of education. A lot of, came up earlier as well, there weren't paper classifieds. People didn't trade. really, prior to this. So we're creating those markets, creating that education, teaching people that they can actually do it.
Right.
And not just as a consumer, that you have the opportunity to sell yourself. And then I would say regulation. We've got a lot of governments, a lot of bureaucracy, a lot of paperwork, fill in 12 forms, 5 reference checks, wait 5 weeks to just kind of I've been trying to get a credit card in Kenya. I could bore you to tears with that story, but it's painful.
Okay.
And it doesn't help the markets then grow and to bring more people, give them access to our markets.
Okay. A couple of other quick questions. You mentioned that in your markets everything is on Facebook. How do you secure yourself to be not reliant on Facebook and not get disrupted by Facebook?
Yeah. So we work very hard to get the content onto our platforms. Facebook they're obviously very interested in Africa, but they don't launch a lot of there's no marketplace, for example. Except for South Africa, you don't have marketplace. So everything's group run. Now, pros and cons of that is groups are as good as the people who moderate them, and they're all user moderated. So you've got an opportunity there to just provide a better service and better access. And a lot of people, they might want to advertise on Facebook, but they don't know how to do it, or they don't have the time to do it. So we can scale that. We can sort of be the experts and help them distribution. So we've got the content, we'll distribute it for you, manage it for you.
Makes sense. And the last thing is, I want to go back to this Ethiopia thing, and someone's picked up on it in the audience, is how do you get to this 10 million of revenues in a market like Ethiopia? Or it could be any of the other ones, Tanzania, and et cetera, that you're in. How do you actually get to that sort of level of revenues? Is it listing fees, transactions? What's it going to be?
I think it's going to be a model we don't even know yet, because there will be something that leapfrogs all of this. I don't think it's on listing fees. I think it's also markets have become too used to getting that for free. Social media, you just post and go and maybe. But I think it's in adding that value. It is probably getting in the transaction. But for a country like Ethiopia, it'll get there one day. But you're probably still at least 5 years away from actually being able to monetize anything consistently.
Right. So it seems to me that logically speaking, if it's very hard to get listing fees out of a market, and you're not going to change fundamentally the way, people will, I need a house, you've got a house, there's going to be a transaction, right? That's not going to change. It's not like you're not going to live in the house. That the role is if you can become powerful enough in the market and have enough trust. Because I think what you see around the world is where these businesses can move into transactions when it becomes trust-based.
Yes.
So how do you think about trust in these markets and establishing trust between you and the consumers in general?
It's been a lot around quality. So we work very, very hard to get quality listings, bring that transparency of information. It's often not available. We work very carefully to prevent fraud and scamming. And then to confer a lot of it's just awareness in the markets. If people see you and they see you often enough and they then kind of have that experience and come back, they trust you. And we, in all of our startup markets or where we're launching, we always, even on classifieds, we go after the B2C guys first. We go after the dealers, be it, take Ethiopia, we're going after cars, getting cars, dealers on, property agents, electronic dealers, etc. on board. Because they bring the content, they start interacting with it, people buy from them, and it kind of just eventually you get that word of mouth and that snowball effect.
But it's a long path, right?
It's a very long path.
But I think if you
no silver bullet here.
No, I agree. And I think if you can establish that trust, then you will release $10 million worth of value in an industry, but probably more on the transaction scheme.
I would imagine so.
Yeah.
It's not that people don't want to pay for listings, but I think you're always going to hit a cap there.
But
I suppose not necessarily.
Well,
a lot of markets have done it.
I do think if you look at and we were talking in our strategy session with Kevin from Shui Property in Myanmar, and what's interesting is their strategy is how do I become really the central part of the real estate industry in this case, and that everyone can touch me how they want to interact with me. But we become the trusted source of data or trusted source of transactions or listing leads or whatever. It's just a trusted source. The brand equals X.
Yeah.
And I think if I was in your shoes and I was thinking about Ethiopia or Tanzania or Senegal or wherever, and I've got a great position, I would be saying, how do I make trust front and center for every transaction?
That's 99% of our branding campaigns
Yeah.
is trust
Okay.
us. Well, I mean, that sounds a bit like a dodgy car salesman. Trust
Yes.
us, promise. But yes, essentially, we're your partner. We're going to help your business. We're going to help you scale, grow,
Fantastic.
ultimately help you transform your life and the lives of your kids.
Fantastic. Thank you very much.
Thank you.
Interesting what you're doing in that part of the world.
Thank you.
Excellent. Thank you. Great to see you.